All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin in the crypto markets. And boy, are we seeing a dump today. Bitcoin is losing support levels. We finally came down to take out our 98.2K lows, which I've been talking about as a very high probability over the last couple of weeks to come down and take out these lows. But the question is, are we done dumping yet? Is the dump over? And honestly, guys, what I'm seeing here does not look good. Bitcoin could be in its last impulse down here, and we could be coming to 96.5K, which is where I really was looking for Bitcoin to come down to, or even down to $92,500. And so I want to cover some high time frame analysis. We'll cover what's going on right now. We are seeing a little bit of a swing failure pattern of those lows. But the thing is, guys, we look like we're in an unfinished impulse to the downside, and we are seeing volume increase drastically on this dump to the downside, and you do not want to see volume increase drastically. This is the volume of a third wave impulse to the downside. So what we're looking at as far as our Elliot waves go, if we look at our larger dump from the dead cat bounce highs at 116K, we have our impulse down, we have our corrective move up, bearishly backtesting not only our channel that we broke down from, but our key anchored VWAP at there's 74K anchored VWAPs. And then we could be seeing our last impulse down all the way potentially down to $92,500. But if we look at this last push down from the rejection of our bearish backtest of 107K, that key anchored VWAP, that key channel that we broke down from, you can see here we do have what looks like a double 1-2 impulse. There's your 1-2, there's your internal 1-2 or your secondary 1-2. We could be in a third wave dump to the downside, coming and bouncing from 96.5, seeing a 4-5, a 4-5. Because if we're looking at 2 1-2s, we also need to be looking at 2 4-5s here. So yes, I am looking for long positions right now. We do have some confirmations on the charts as far as potential 1 hour bull divs on the chart. Now, NAMI has invalidated those 1 hour bull divs, and money flow is decreasing on NAMI right now. But in yesterday's video, I talked about if we could come down and take out last Tuesday's lows, those 99K lows, let's just say, from last Tuesday, 99K, we would develop some potential nice bull divs on the chart on the 4 hour time frame, bull divs on the chart, but NAMI is about to invalidate those bull divs. We did print those hidden bear divs, which was continuation, making it highly likely that we were going to come down and take out last Tuesday's lows. And if we zoom out onto our daily chart here, on the daily chart, we are potentially developing some nice bull divs on the chart on both NAMI and Market Cipher B. But here's the thing, guys. We are seeing a drastic red candle today, and depending on how our candle closes today on Market Cipher B, we could see that money flow continue to grind out rapidly on the Bitcoin price. And as we know, one drive of bull div will not overpower super bearish money flow. And so this dump could keep continuing. We are seeing volume increase on this dump. And honestly, I'm looking to come down potentially to the bottom of our macro pitchfork here. This pitchfork, I want to talk about this pitchfork in just a bit here. This pitchfork on Bybit is different on Coinbase because of the lows that were pulled. We'll talk about that in just a second here. But first, let me go ahead and hop into the chat, say hi to everyone. Samuel S., welcome in, man. Thank you so much for being here. Andrew, welcome in. Tiki Taku, thank you guys for being here. 5 waves up to 16K, 120 to 125, 16 to 125, then an ABC to the deep. Yeah, we'll talk about some Elliot wave analysis in a bit here. Is it bouncing time? Lambachi, welcome in. Thank you for coming. Olafray, welcome in. Double 12S, 12. Not sure what that 12S is, but just let me know in the chat here. 125K, I'm a top shorter. Awesome, Tiki Taku. I would be holding that. I would definitely be holding that open, taking some profits at macro support levels, but definitely we should hit the bottom by the 15th. In my opinion, your target is the 18th, correct? For me, we'll go ahead and check that trend-based Fibonacci time. I do believe it was around November 18th that 382 trend-based Fibonacci time was done there, and we'll check that out. Blue collar trader, welcome in. Machi HK, how's it going, man? I bet you are printing in your shorts because you were even more bearish than me towards the top there. So great job, man. Welcome in. Andrew, welcome in, man. It's good to see you as well. Golden liquidation, welcome in. 15-minute chart is looking funny at Machi HK. You know, the thing for me is what we're seeing right now on the higher time frames, on this daily time frame, we probably are looking at a contracting diagonal in here. That's probably the highest scenario, is some sort of contracting diagonal in here where we are going to eventually see a bounce up from this and a relief rally. But the thing is are we going to continue dumping here in this contracting diagonal until, you know, bouncing from 96.5, coming up to the top of the contracting diagonal for a nice scalp long position, and then dropping back down to the bottom of our pitchfork and to our key 92.5K support before seeing that bigger relief rally, potentially up to wherever that golden pocket's going to be. So let me go ahead and talk about, we'll go in right now because action is happening on the charts right now. We'll go in right now when we'll talk about, in yesterday's video, I was talking about a potential local support level being that 100.7K support. But I did post in the Telegram that, guys, we were not seeing really any bull div there, any confirmations to enter a trade as we were coming down there. We did have a naked daily point of control at that area. If we go ahead and turn on our naked daily points of controls, and our 786 was also there. Also, the value area low of our range was there. If we pull on that value area low, you can see now it's shifted down, but with the dump today. But you can see value area low was down in that area, as well as your 786 Fibonacci pull from the lows of last Tuesday to our highs. Let's actually make that correct there and throw on that 786. You can see that 786 was in perfect confluence with that naked daily point of control. No reaction there, no real bull divs on the chart. Looked like volume was increasing on the dump to the downside, and so we broke through it pretty rapidly. No local support holds. And I did say, guys, in yesterday's video, I am actually looking to come take out last Tuesday's lows and to come down and take out the 98.2K lows. Actually, I'm even looking to come down a little bit lower to the 96.5K area of support. ZMX, welcome in, man. Steph Viven, thank you guys for being here. Mind Tapestry. I was just watching Jason Cashper. He mentioned your recommendation. She Legit. Yes, She Legit has performed miracles for me, guys. She Legit is a mineral supplement of high up in the mountains of the Himalayas, where plant material that's millions of years old has been compressed in between tons and tons of pressure of rock, and it oozes out into, in the summer times, it oozes out of that rock as a black goo. And the Tibetan monks were studying these monkeys that had super good libidos and super good health and strength, and the monkeys would climb up the mountain and lick it out the rocks. And one species of monkeys was doing it, the other species wasn't. And the species that was doing it was far more healthy, far more vital, far more reproductive. And so they started studying it, and it's got 85 minerals in their bioavailable form that the human body has been consuming for hundreds of thousands of years. It's just a great supplement. If you get a chance, look into it. I highly recommend it. It's really good natural energy, completely natural. It's got all the terpenes of the plants in there. So, yeah, great stuff, guys. Great stuff. All right, getting back to the TA here. So, Bitcoin locally, I do think we do have to say the highest probability now, if we go ahead and turn on our volume here, rapid increase in volume on this dump to the downside. This looks more like impulsive volume to the downside to me. And if we look at our rejection, our very key high time frame rejection, let me turn on that channel once again. And let's zoom out onto the daily time frame. So over the past few weeks, there has been one thing that I've been harping on over and over on this chart. And let me hide this pitchfork real quick here. One thing that I've been harping on over and over on this chart is our 74K anchored VWAP. And guys, an anchored VWAP is a volume weighted trend pretty much. If you're going to remain bullish in your sentiment overall, making a bullish market structure and higher highs and higher lows, you want to maintain above that anchored VWAP. But if you start to come down, you bounce from it, and you make new highs, you can say the bullish trend is still strong. But when we crashed a few Fridays ago, about a month ago, we came down and we touched that anchored VWAP perfectly. We got our dead cat bounce, and then we tried to break it down for the first time. We were able to close our daily candle or close our weekly candle above it, but we hit it 3 times, kind of forming that inverse head and shoulders, which could have been a legit bottom, left shoulder, head, right shoulder. But we just could not get, we took out the liquidity of our local range highs. And after taking out that liquidity, we dumped and we're dumping. The thing with this liquidity grab, I said as we were coming up there, I was warning everyone in my videos and streams, it looked like more of a 3-wave corrective move to the upside, taking out the range liquidity, and I expected us to dump, at least back down to the bottom of the range. But here's the thing. You can see this anchored VWAP from 74K was holding as support for a couple weeks. When we broke it to the downside, we finally broke it to the downside, and we broke it to the downside with volume. Now, that is key. We broke it to the downside with volume and with an imbalance candle to the downside. We closed that weekly candle below our anchored VWAP, which was our very first sign of the macro trend could be shifting from a macro bullish sentiment since April to now a more macro bearish sentiment that could bring us down sub 70K or to 70K, around 70K. But the thing was, when we lost that anchored VWAP, so now I'm going to zoom in, before I zoom in, actually, we were also in our channel, which was from the lows of our 2024 range, connected to those 74K lows. Those were 2 major pivot lows of the last 2 years. And of course, I brought it up to our initial 2024 all-time high. We broke that range to the downside about the same time we broke our anchored VWAP to the downside, confirming 2 major trend breaks to the downside. Our major trend is now getting broken to the downside. Well, anytime you break a major trend to the downside like that, you will generally bounce from a local support level. And remember, there was a naked daily point of control down here. We bounced from a naked daily point of control, and then we came back up to bearishly backtest our key anchored VWAP and our key channel. And it was also our local golden pocket. We had a local golden pocket in that area. Now, guys, when we rejected from that area, I did short. I am still short on the Bitcoin price from about 107.2K. And I have taken 2 take profits on that now. I took a take profit at the, what was that, yesterday at the golden pocket at 101,900. And then I took a second TP just now when we took out the 98.2K lows. But here's the thing. This trend to the downside now that we've confirmed a flip from our anchored VWAP from support to resistance, we can expect this trend. We expected to come down to make new lows after confirming the bearish backtest at 107K. Let's zoom in onto the 2-hour chart. When we rejected here, the day we rejected there this Monday, I said it was highly likely that we were going to come down to take out Tuesday's lows. That's just the way it works with bearish price action and market structure. Remember, market structure is king. Bearish backtests are important. You will get small rallies on relief rallies for backtests. But we crashed down pretty hard here. And now I want to turn back on that pitchfork. And we're going to talk about that pitchfork from our wave 3 impulse to the upside on our weekly impulse. So I'm just going to zoom out to the 2-day chart real quick. And you can see this pitchfork has really guided us for the entire year of 2025 and really a lot of 2024 as well. But we pulled it from our wave 3 beginning, the beginning of your wave 3 impulse, to the end of your wave 3 impulse, to the end of your wave 4 correction. If we're looking at that bigger 5-wave move to the upside, remember, a bull market, 5-wave, 1, 2, 3, 4, 5-wave move to the upside, pulling it from our key 3rd wave, which is generally your highest, most volume filled and longest wave to the upside, generally, not always, but that key pitchfork is going to give you your key wave 5 targets. Generally hitting the top of the pitchfork can be the end of a wave 5 target. Well, when we hit the end of that pitchfork, we did, correct all the way down to the bottom band. And then of course we came up to the upper band again. Now we're losing over the past couple of weeks, or, this week, we have been trending and chopping within that pitchfork band. So let me go ahead and zoom in here onto the hourly chart. You can see since last Tuesday's lows, we've really just been chopping in between the pitchfork band. And by the way, on Wednesday, when we rejected on a lower high, rejected the top of that pitchfork band again, we dropped right to the bottom. I was expecting another lower high before coming down and taking out our lows, because we're starting to lose our pitchfork band. And if you lose your pitchfork band and start to close like high time frame candles, daily candles or a weekly candle below this pitchfork band, it is possible that we continue this bearish trend until we get down to the bottom of the pitchfork. Now, yes, we will have bounces along the way, and we do have some pretty macro support levels along the way. But from our rejection of the 107K, now this is all this talk just to tell you how important this rejection at 107K was. This rejection at 107K kind of gave us a confirmation that we could be flipping to a more macro bearish sentiment, more macro bearish market structure continuation. And from that high, you can see here, we do have what looks like a double 1-2 impulse to the downside. So we have our wave 1, we have our wave 2, which retraced pretty much to the golden pocket. It front ran the golden pocket, but it's because we had a naked daily point of control there and a fair value gap we filled in. And then our golden pocket was there. Maybe it wasn't a naked daily. Maybe I'm mixing that up, but it was a fair value gap fill into the pitchfork band. Then we dumped yesterday to the bottom of the pitchfork band. We got a small bounce there. We came up again to your local golden pocket area. So, and there's overlap between your wave 1 lows, your initial wave 1 lows, and your initial wave 2, your wave 2 highs. So we can't classify this now as a 1, 2, 3, 4, 5 because there's overlap between wave 1 and wave 4. So if there's overlap, and if you hit that golden pocket, if we were looking at this, now let's just throw this on here to be a little bit more precise. If we cannot look at this as a 5-wave impulse like this. First of all, why can't we look at this as a 5-wave impulse like this? Because your third wave is the shortest wave. In a hard rule in Elliot waves, the third wave cannot be the shortest wave. Sometimes you get an extended 1, sometimes you get an extended 5, but your third wave cannot be the shortest. Also, another hard rule in Elliot waves, if the lows of your wave 1 overlaps with the highs of your wave 4, it invalidates it as an impulse. But here's the thing. There is such thing as a double 1-2 impulse or even a multiple 1-2 impulse where you have a bunch of 1-2s, 1-2, 1-2. You get your big third wave, and then you get your 4-5s, 4-5s, 4-5s that come in. And you generally see those descending channels as your descending channels or wedges as that impulse is starting and finishing. So here from that 107K, looks like we have a 1-2. Then we have our internal 1, internal 2. That's a secondary 1-2. We could be in our third wave dump to the downside right now before seeing some relief rally and then seeing some 4-5s, 4-5s to finish this out here. Potentially coming down to that golden pocket between 94 and 92K. So that's kind of what I'm looking at here. And the reason why I'm looking at this as a potential third wave is because of our large volume increase on the dump to the downside. And generally your third wave has the highest, strongest volume to the downside within the entire impulse. And so that's going to be really, really key to recognize that volume is increasing on this dump. Yes, we are getting a nice little swing failure pattern right now, but guys, just be aware. I don't think this is quite done yet. If we pull our trend-based Fibonacci extinction from the highs of wave 1 to the lows of wave 1 to the highs of wave 2, and you always want to use your primary 1-2, not your secondary 1-2, you can turn on that 1.618 Fibonacci, and that's generally where your wave 3 ends. That area right there. So we could see this thing continue down until we bounce from the 1.618, then see a little bit of a 4, 5, 4, 5, something like that. You know, you want to have some symmetry with these 1-2s in here. But that is right now a possibility I'm looking at. Yes, we are getting a scalp long position. And guys, if you did take that swing failure pattern scalp long, I agree with it wholeheartedly. But just be aware that this could end up in another lower high, rejecting between the 382 and the 0.5 Fibonacci before coming back down again. And that's if your wave 3 is put in completely. I'm not so sure our wave 3 is put in completely to the downside yet. So, and then I'm going to go into our other pitchfork. It's the same exact pitchfork pull, but on Bybit, which is the other major exchange I follow. But before I do that, let me check the chat real quick. I see you guys are typing away here. Thank you all for joining me. Welcome in, everybody. We have some exciting price action today for Bitcoin for the crypto market. But let's check the chat here. Okay. Where was I? Let's get that bounce. Yeah, Steph, we could get a bounce here because we are seeing that liquidity grab. And we saw, by the way, guys, look how many shorts we saw coming in towards the bottom of a dump. Like, people just do not learn. Fresh shorts coming in, and look at the massive increase in open interest. That means those were fresh positions, fresh short positions coming in towards the bottom of our move. So if we do get that liquidity grab, the market makers stopped out all the longers from way back that were holding their positions from way back. Now we could get a short squeeze to the upside very rapidly if these shorts get trapped underwater. So we want to see that open interest. If that open interest starts to dump, that could be a sign that we're going to get a short squeeze, and we could get a violent, aggressive push to the upside, squeezing out all of these late shorters that just came in and shorted here. So we're going to watch for that now, but I am not so sure we're going to get that quite yet. All right. Mind Tapestry. Hey, Divine Hood. I was just watching Jason Casper. He mentioned, yes, Jason, I was just watching him too. Jason's awesome. And I do recommend She Legit. Give it a try, guys. Do your research on it. Get a third-party tested one, a legit brand. So, she's legit. Yeah, she's legit. BG, that's awesome. C-Train, welcome in, man. It's really good to see you. Mickey, thank you so much for being here. Welcome into you as well. Hope you are having a good day, man. David Hornback, welcome in. What brand of She Legit am I taking? It's called Healing She Legit. And gosh, I will get that and give it to you guys either later in the stream, or I can post it in the Telegram group, or I can get it ready for tomorrow's stream as well. So yes, volume is key, guys. Volume is increasing rapidly on this dump to the downside. Please smash the like button. Decrypto, welcome in. Yes, guys, if you do get any sort of insight into the market from this live stream, please smash the like button for me. Please share the stream with anyone you think would find it interesting. And I just want to say thank you guys all so much for being here. You guys mean so much to me. I love the community we're building, the regulars we have in here. I appreciate all of you so much. Of course, we're going to hold some levels. Now, we dumped so hard last few weeks, 94K, maybe 97K, high probability. Yes, I do think we're going to get some bounces along the way, guys. But the very key thing was, very key thing was that flip of the anchored VWAP that was holding as support for multiple weeks, now flipping into resistance. And I've been saying, even when we were up here, guys, before that dump on Friday, a few Fridays ago, a month ago or so, we were looking to come down to test the anchored VWAP, and we did exactly on Coinbase. I know other exchanges went farther. Coinbase hit it to the dollar and started bouncing. And at that point, I was actually bullish because it was our first time back testing that anchored VWAP since the 74K lows. It was our first time on Coinbase back testing it. And then also when we were developing that inverse head and shoulder down here, it was looking kind of good. But I mean, that dump, we do have to say on a lot of exchanges, that dump invalidated all the bullish Elliott wave counts, because especially on the altcoins that dumped like 80%. And because of that, we had to switch our bias based off market structure. We broke our 107K lows, breaking our daily market structure bearishly. We have to shift our bias to now it's a higher probability that we now create a lower high before another lower low. And that's exactly what's happening. And we're just continuing bearish market structure here. But let's go ahead and, so I want to talk about really quickly, let's go on to the Bybit chart. I want to show you guys the same exact pitchfork pulled from that first wave 3 beginning, the beginning of the wave 3 impulse, but you can see the wick on Bybit's a lot deeper than on Coinbase, to the highs, to the lows of our wave 4 correction. You can see how the Bybit chart pitchfork is a little bit different. We hit the top of the pitchfork 3 times. On Coinbase, we only hit it once. On Bybit, we bounced on our 74K lows directly from our lower band. On Coinbase, we wick past it just a little bit, but the candle body closed directly at our lower band. But the thing is, right now with our Bybit chart, and I do have to say, even though I follow Coinbase levels more, I have been looking at this Bybit pitchfork because it's so nicely respected. And look at where we just came down to today. If we zoom in onto the hourly chart, SFPing the lows into the bottom of the pitchfork band. Earlier this week, as this range was forming here, it was inside the Coinbase pitchfork band. But you can see on Bybit, it was holding as support for most of the week. And now we're breaking to the bottom of the pitchfork band. So there is a probability that we could bounce from here to come up to the top of the pitchfork band. Now, remember, we did this on Coinbase just yesterday. If we bounce from the bottom of the band, come up to the top and reject the top of this band right around 101, 750-ish, 101, 700, let's say, we could dump hard. So 101, 700, we know that was a naked daily point of control that we busted through earlier today. We also know that's the value area low of our range. And guys, this is key. We're losing our range to the downside. If we come up, I guess it's a little bit lower on Bybit, but if we come up to backtest our value area low / POC area, in confluence with that pitchfork band and we reject, we could continue to the downside. But what was I just going to say? Oh, yes. So we are seeing a swing failure pattern. It doesn't look the best here. We do have some confirmations on bull divs, but money flow looks bearish. And also on the lower time frames, we're not seeing, like if we zoom in onto the 15-minute chart, we are just not seeing the bull divs we want to see here. No bull divs on NAMI or Market Cipher B. And I do think this dump to the downside might continue. Let's look at that 98.4, 1.618 Fibonacci extinction. Let's throw that back on there. 1.618 at 97.4. We could get a bounce from there after making one more low, kind of getting all the exchanges in on this SFP here. Okay, so yeah, but going back to our pitchfork band, we are kind of bouncing from the bottom of it. But once again, if I zoom out on, let's go back to Coinbase and let's zoom out onto higher time frames, onto the daily chart. And we know that 96.5 to 96.6K is a major point of control. If we turn on that 2025 macro range, all of 2025's price action, and I'm just going to drag this to current price action, you can see that right coming in, it's right around 96,500 to 96,600 because that red line is so thick there. It's about $100 of price action there, 96.6, let's say. We could see a macro bounce from that area, or a nice, it's a macro support area. So we could see a nice bounce from that area. But here's what I'm looking at, guys. For this double 1-2 impulse over the past week that we've been developing, I'm going to zoom in on just a second to show you that. But look at where our value area low of our range is coming in. Directly on top of our 0.65 macro golden pocket pull. Pulled from the 74K lows to our all-time high. That golden pocket is coming in at 92, let's say 92,600. And that value area low is coming in right there. Also, guys, if we do get a bounce from this POC, only to come up to backtest this pitchfork band and reject before coming down to the bottom of the pitchfork, guess what? You would have perfect confluence with the bottom of your pitchfork, value area low, and your macro golden pocket. So we could see a drop to 92.5K, 93, 92.5K over the next week or so. Now let's zoom in onto the 1 hour chart. And I want to talk about this drop since 107K. First off, if we turn on our channel, if we look at it just a channel here, we take a horizontal channel and we connect our 1-2s. Oh, let me redo that. We go from the high at 107K down to your lower high there, and you bring it down to your first wave 1 low. You can see very nicely we were trading within a descending channel, being highly respected descending channel here. That is a sign that these could be 1-2s, 1-2, 1-2, and it's oftentimes rejecting from the golden pockets on the lower highs. You get your big third wave down, and then you see some 4-5s in another descending channel here, coming down to that 92.5K area. So that is something that I'm looking for now, just based off the increased volume. We could see this, and first of all, this third wave might not be even in yet. It might continue pushing down to hitting 96.5 before we bounce from our third wave. But channel breaking to the downside, it's breaking to the downside with volume. Also, if we go ahead and look at, let's hide that. Let's go ahead and pull a theoretical Fibonacci. Now, this Fibonacci golden pocket is theoretical, but it's going to be from the highs rejecting yesterday to our 96, just to our POC. Let's throw it right onto that POC there. Let's turn on our wave 4 targets, and we would be looking for a bounce, maybe it's 96K to backtest that 100K psychological level before maybe continuing to drop here. That's something that I'll be watching over the next couple of days. That's theoretical right now. We do not have that playing out yet. But one of the things that I was saying about this rejection, so we had the major rejection on Monday from the 107K high, bearish backtest of the channel and the anchored VWAP. But on Wednesday, yesterday, we had a rejection from the top of the pitchfork band. Now, I want to go back to, this is on the Coinbase chart. Remember, the Coinbase pitchfork is just a little bit different than the Bybit pitchfork. Let's go back to the Bybit pitchfork. It's the same exact pitchfork pull, but just from the bottom. The bottom is different on the macro wave 3 low. And if we look at a swing failure pattern from here and we bounce and we get a dead cat bounce to come up to backtest this pitchfork band, it could be very similar to what we saw on Wednesday, a backtest of the band before kind of breaking it down here. And so we have to watch for that backtest. of this pitchfork band as well, coming in around 101,700, 101,600, which is where our naked daily point of control and the value area low of the Coinbase ranges. Remember, Coinbase levels are far more respected, at least in my view of things. Okay, so actually, let's see. Where's that 101.9? 101.8. Okay, I guess it's the point of control. Now the value area low is obviously shifted lower with the big increase drop that we saw today. No, this is got to be pulled from here. Okay. Yeah, so it would be the point of control of the range. It wouldn't be the value area low anymore. It'd be the point of control, but that's that general area, 101.7, 101.8 is going to be a key back test now. And not only would it be the top of our Coinbase or our Bybit pitchfork at 101.7 here, 101.6, 101.7 here, but it would be the bottom of the Bybit Coinbase. Excuse me. I'm sorry. I keep confusing these. Just know that 101.6 to 101.8 is now a very key level of resistance. Okay. Mickey said maybe 93 to 100 or 110. Yeah. If we bounce from that 93K golden pocket, we could get a macro higher low on the charts. So let me just zoom out onto the daily time frame again. What we would be looking at, say we did continue grinding down in this contracting diagonal here, and we bounce from the bottom of the pitchfork in the 93K lows, 92.5K lows. I would then pull a golden pocket from your all-time high down to that bounce, wherever that low is going to be, and you would look at that low, that golden pocket here around 113 to 114K, which, by the way, it would be the top of your pitchfork band, right? You would be looking for a 3-wave corrective move up to that general area, and then you could continue the impulsive price action down. A macro 3-wave corrective move, but you'll have a 5-wave impulse in here, a 3-wave correction in here, a 5-wave impulse in here. So locally, it will look like you're impulsing up, but it would be a higher time frame ABC correction before making a macro lower high before continuing the dump. And that would really confirm a bear market for me. I mean, that would really, really confirm the bear market. The dump down, you know, at least a dump to 74K, a micro bear market. Or, yeah. Yes, DApp Passive, we'll look at Doge. We'll look at some of the altcoins in just a second, guys. I just want to get through Bitcoin here. See me gap at 92K. Yep, so more confluence at 92K there. My 786-618 golden pocket is 90 to 95K, but my 886 is saying 86K. Yeah, we definitely don't want to hit that 886 Fibonacci. Jasa, what's up, man? Welcome in. Yeah, the TA has been pretty crazy the last few weeks, but we've been expecting this. By the way, guys, for a month now, actually, when we SFP'd the all-time high, I said, be very careful here. As this range was developing, I was telling all of you guys, this looked like a distribution range. I was saying we could get a model 1 distribution, a tap 1, a tap 2, a tap 3, because as that range was forming, we were getting bear divs and the money flow was draining out as the range was forming. That's a telltale sign of a distribution range. The last time we got one of those distribution ranges was in early January through February, or November through February, excuse me, where we were making the higher highs on the chart, lower highs on the price action. Money flow was draining as the range was forming, distributed all the way down to 74K. So we were looking at that ahead of time before this dump even started. We were looking at distribution down. Actually, we were looking at it down to our point of control at 96.5. So we're almost to our target that we were looking at over a month ago. BTC showing a little pump. Yeah, it's showing a little bit of a move up, but I don't think it's too much of anything right now. Like, we're just seeing a little bit of people that longed the SFP make it a little bit of a move up. Now, we could get a significant squeeze up here if we start to take out some of those late shorters. Look at all of these massive increase in open interest. That means new positions are opening. Remember, open interest is the amount of positions closing or opening on the exchanges. If open interest is increasing, that means new positions are opening. Well, how do we tell what those positions are? Well, that's where you come in and look at your CVD. Your CVD, if your CVD is going lower, we know those are market shorters opening up new positions. So we've had a lot of shorters shorting all day today, causing the price to go down. So it's a healthy move to the downside. It's not a squeeze to the downside. It's a healthy, strong move to the downside. Now, the problem with that is if you continue to get shorters, look at how aggressive the shorters were coming in here towards the bottom. So like this last little bit here, We were getting aggressive short positions coming in right near your lows there. Like, that is wild to see. And so if we can get above, let's say if we can get really above, like where we rejected kind of, if we can get above 100K, 99.5, then we could see a massive short squeeze come in here. But if we don't, those shorts are in control and we will continue pushing down here on the price. So we're in a battle right now and the bears are winning. The bears are significantly winning right now. More like 12, more like a 1-2-1-2 wave. Yes, that's exactly what I'm thinking too. A double 1-2 wave there. Where did that go? Gosh, I got to catch up to you guys in the chat. Yeah, Machi HK, that's what I'm looking at, a double 1-2. I have long this except a beard of 100.5K and up, if not possible, starting to look at 95K area. Yeah, Jasa, 94 to 92.5 is what I'm looking at. But also 96.5 is our key, or 96.6, let's say, is our big high time frame point of control, which I do expect at least some sort of reaction there. By the way, Bro, I took a risky long 98, 188. That's ZMX. That's a good play. It was a scalp swing failure pattern. I mean, it was a swing failure pattern. So I understand you taking that. Now, remember, your stop is going to go below wherever that low was. So just be aware of that. On Bybit, it looks like it's at like 98.076. So maybe put your stop at 98.050 and hope you don't get stopped out. And if you do, just move on to the next trade. Celine Nina Anderson, welcome in. 86K would be in line with April dump percentage. Okay, 86K would be in line. So that dump, you guys, we got, let's zoom out to the daily time frame. The dump that we got from our last all-time high to 74K, that was a 32% move to the downside. And if we look at the dump that we're about to see right now, down to 86K, yeah, that's 86K is pretty much 32% as well. You're right. So, but if we break this key bullish pitchfork structure, guys, I'm going to be calling for bear market. I might be calling for bounces along the way, but I would be calling for bear markets. Like, I understand the way these pitchforks work. I've traded them for mini cycles. And if we see a macro pitchfork breakdown like this, by the way, remember earlier when we broke down the smaller pitchfork, let me pull that small pitchfork right now. We'll pull it from the 98.2K lows up to your original all-time high down to those 107K lows. And I will hide this big pitchfork. When we were trading in this pitchfork here, and remember when we lost it, we bounced from the anchor VWAP, but we rejected on the bearish backtest. Once we broke this down, we saw significant downside since then. And if we break this down, guys, if we break down our macro pitchfork, that is not going to be good for us. Not going to be good at all. So we really want to we want to hold 92.5K. Okay. Sorry, guys, I'm so far behind on the chat. I want it to be 5 waves down. Yeah, it looks like it's going to be a double 1-2 impulse down. That's what I'm looking at as the highest probability right now. Okay, Big Al, welcome in, and thank you for that nice comment, man. Appreciate you being here. Okay, so we got KASPA, DOGE and KASPA. We'll look at those, guys. We will look at some altcoins. Everyone's taking She Legit. You know, I mentioned that to Jay like 6 months ago on his live stream, and then I had a bunch of people DM me about it. And I started using it a few years ago, and I'll do 3 months on, 3 months off. But Jay finally got around to giving it a try, and it's been really working great for him, and he's been mentioning it a lot on his streams, and so a lot of people are now starting to use it. But yeah, it is used. If you look at all like the high-end natural testosterone boosters out there, they all have She Legit in them, or fulvic acid, which is, you know, a major component of She Legit. Quiles, welcome in, man. Tuna Melt, welcome in. Thank you guys so much for being here. Yeah, Mickey, I understand what you're saying, though. Whole Foods, really, if you can eat the right, good quality Whole Foods is the way to go for sure. But you know how bare our soils and our vegetables and fruits have now gotten from the nutrients being stripped of the land. Iodine, super important. Bromine replaces iodine. Fluoride replaces iodine as well. Yeah, fluoride, though, I heard is really bad for you, your brain, toxicity for your brain. I saw that the Lancet classified it as a neurotoxin on the same category as cyanide. So fluoride, you know, for me, it's a no-no. I stay away from it. Okay, what chart do you use for volume momentum? I use the Coinbase chart. Kevin, I use the Coinbase chart for volume levels. The volume profiles just for volume in general, I use the Coinbase chart. If you go onto CoinGlass and check the whale orders and large trade charts, there is 71 million worth of Bitcoin spot at 94K. Okay, well guys, 94K is the top of that golden pocket. And depending on how quickly we come down and hit that, the pitchfork, if we bounce here, make a little rise and then come down, 94K could be in alignment. And on Bybit, I do believe on Bybit, let's go on to the Bybit chart, this Bybit chart, and let's look at, so you can see your value area low or of the macro range is a little bit higher than Coinbase is. It's going to be coming in around 93,150-ish or 93K, 93,150-ish. So yeah, but 94 to 92K is the level, guys. And of course, if we have a bunch of orders at 94K, it could wick a little bit below those orders and fill those orders up completely. And then we could get that push back up. So just buy MSN. You don't want to. Yeah, MSN's really good too, Mickey. I absolutely agree with you there. Okay. Be careful, guys. 96K. Again, from 98.2K. That is not the value area high. Not again. POC maybe. Again, from 98.2K. That is value area high. Not again. It's 96.5K is the point of control of our range. 98.2K was just a liquidity grab of some key lows. You can see these key corrective lows in here. This was a 3-wave corrective move in here. And on the bottom of that correction, you saw a nice impulse out of that. So a lot of people that longed in the bottom of this area put their stops below that low. So of course, high time frame swing traders and like the big guys that trade for months at a time and with millions and billions of dollars, their stops would go below that low. Hedge funds. 101,700 next short. Yeah, 101,700. Let's see how this this SFP plays out, but 101,700 is now going to be our local resistance above us. Too late, bud, and I'm heading to the gym. I want to work out alone today. Samuel S., hey, man, thank you for stopping in. You definitely need to get your gym stuff in. I agree everyone should be doing their exercise at the gym, so thank you for coming and stuff. Okay, thank you for the super chat, McChicken. Let's see. I believe we are doing a 1-2-1-2 wave on BTC, which could hit 96.5 or lower at 93K around November 17th, which would mark the bottom along with the death cross. I agree with that perfectly here, actually. I just covered that a little bit, but if we zoom in onto the 1 hour again, and actually let's go on to our more macro chart, our Binance chart, and I want to zoom out onto the daily time frame. Let's throw on that trend-based Fibonacci time. So, actually, not this one. We're going to do it from the original top of the pitchfork. So you can see our 382. What did I just do there? Okay, not that one. This guy right here. Yeah. So you can see our 382 is coming in. And let me explain this, guys. So let's zoom out to the weekly time frame. Now, on our weekly, from the bear market bottom, I'll get rid of this real quick. From the bear market bottom to the highs that we made in January, I was looking at this being a completed, not this one. That was something we were just looking at as an idea that some people are looking at. I was looking at this being a completed 5-wave impulse to the upside, because after that is when we had that distribution range. Remember this distribution range that we had in January that dumped us down to 74K, changing your weekly market structure bearishly. And what do I mean by that? If we zoom in here, you can see that we had some weekly lows of that range coming in at, what was that? 91K, around 91K. Once we broke those lows, or actually it was this one, 90.5K. Once we broke that, we officially changed market structure bearishly by breaking those lows of that 3-month-long range, 4-month-long range. So because you finally have a high time frame break in market structure bearishly, you could say this impulse is over now. We had a very clean 1, 2, 3, 4, 5-wave Elliot impulse. Now, after an impulse finishes, you get a corrective move. That corrective move generally goes from the lows of the impulse to the highs of the impulse. If you take a trend-based Fibonacci time from the start of the impulse to the end of the impulse, then you generally will see at least a corrective move. And the minimum target for that correction being done is the 0.382. But sometimes you go all the way to the 1-to-1, or the 618 is another key kind of time target. So if we look at this, you're saying, but wait, Divine Hood, we made a new all-time highs. You can't say that this was the end of the impulse. Well, there is such thing as a flat correction. And if you go watch my videos all the way back in December of last year, so almost a full year ago, and actually in February, when we were ending this impulse, I said, guys, the most bullish scenario would be to see a flat correction in here and then continue the bull market in a super cycle. And in a flat correction, if you go from the highs of your fifth wave down to that first corrective low, and you turn on your expansion targets being the 1.236 and then the 1.382. So let me just put on, let's do this, 1.382. Those are common expansion flat targets. And if you look, where do we look at where our candle body ended on the weekly time frame? 1.382 Fibonacci. So we could say that, yes, this was a flat correction that ended exactly where the target was supposed to. An A wave down here, a B wave here, a C wave, or a bigger WXY complex correction in here. And we could now, our target, though, for this correction to end is actually taking out your 74K lows. Coming down, because we took out the highs now we have to take out the lows in our flat correction. So I was looking at this being a possibility, not that one, this guy here being a possibility. Months and months ago, we were looking at this as a possibility. Coming down to take out. Now, of course, we did get one more new all-time high since then, so I have to switch that B wave over there. And then your C wave, you want to end after the 382 Fibonacci time. Well, if we zoom in now onto our 4-hour time frame, you can see that 382 Fib time is coming in November 16th. November 16th there, next Sunday, or this Sunday, this coming up Sunday here. So, maybe we're going to keep dumping throughout the weekend and next Monday start to push up. Now, remember, this is the minimum time target. It does not have to end here. It could continue all the way down. This corrective move could continue all the way until the 618 in mid-June. If we're going to go through a bear market, guys, a bear market usually lasts, 9 months to a year. We could continue to kind of grind down here for the next few months before seeing a rise here. And of course, towards the end, you do get that kind of channel-y structure, that kind of rounded bottom that forms here. And honestly, if it's going to be a mini bear market, we might come down lower than 74K. We might come down, into the mid 50s. We could see this thing kind of extend a little bit here. But that's what I'm looking at for a more macro time frame. We've had this analysis on the charts for a year or more now. I mean, a long time. We've had it on the charts, not a year or more, but since February, at least, we've been looking at this possible scenario. And we'll just have to see how it plays out, guys. We'll have to see. But we are coming down. Let's get back to more of the local time frame stuff. We are coming down to some local, very key support levels. And from what McChannel was saying, we got this potential multiple double 1-2, a 1-2, 1-2. We're in a third wave, and then we could see a 4-5, 4-5 coming down to that 92K. And remember, you get that channel structure at the beginning. You get the big explosive push down in a third wave, and then your 4-5s tend to be grindy as well, getting some exhaustion. And allows you to get those bull divs as you're coming in here. You get those real nice bull divs as you're coming into your macro support level here. Money flow should be curving to the upside, and that's what gives you your nice turnaround, your nice confirmation to long here. Top analysis. Thank you, Kaiju. I appreciate that so much, man. Yes, please hit the like button, guys. If you got anything out of this video so far, any sort of insight into the market, please hit the like button for me. Dimzaj, welcome in. First time watching the channel. Love the knowledge. Yes, we're going to look at KASPA. We're going to look at Dogecoin. So, guys, I'm real sorry I'm spending a lot of time on Bitcoin in the chat, but I want to get the point across here because we know whatever Bitcoin does, the market tends to follow. Yeah, classic distribution. I agree, Baby G. And, Market Cypher is so helpful for seeing that distribution. Okay. Chicken Salt, welcome in, man. Thank you so much for being here. Good time for me in New Zealand, 8:45 a.m. Yes, I will do. I promise you, Chicken Salt, I will do a video on pitchforks. I will. Okay, this is, guys, when these people come on here and say, purchase this pre-sale token, that is a scam. Do not fall for that, okay? They're literally trying to get you to put your liquidity into a token and they're going to rug pull you. So don't listen to those people. I just took that off there. Yeah, Mickey, we are all burned out from cortisol and stress. I agree, dude. Rui, welcome in. Thank you so much for being here. Mark Dutch, welcome in, man. It's so nice to see you. I typed, should I do steroids or go hard on Ozempic? And Google sent me here. Oh, man. Mark Dutch, what a, oh, gosh. Yes, it's a place to be. Damn. It's good to see you, Mark Dutch. Welcome in, man. Sindre, welcome in. Only issues, we have too much confluence in the 93 to 96 K area. So many market makers scare the crap out of people. We dump below 90K. Yes, we also have a weekly fair value gap down there. Yep, and we could dump a little bit past it, you know, especially if our pitchfork, if we see a quick dump and our pitchfork is still not quite, what we could see actually here is you see how our pitchfork is below the golden pocket, about 90K, 91K. We could see a dump to come down to the bottom of the pitchfork and wick past it a little bit. But also, I want to go on to the Binance chart, and I want to turn on that macro pitchfork. I think it's this guy here. Yes. Now, this is very, very key, guys, because on our macro multi-cycle pitchfork, and let me just turn off some of this trend-based fib time. Let me turn off this target, and we'll look at the 2-day time frame here. On this pitchfork, it's a multi-cycle pitchfork pulled from the COVID lows of your COVID 2020 lows up to the 65K bear market, bull market highs. 65K was the top based off liquidity and volume. Of course, we went higher to 69K, but it looked like a 3-wave corrective move before coming down. Almost another flat in some ways, you know. And then down to the bear market lows. And if we look at how well this pitchfork has been respected on macro time frame analysis, you know, rejected the bottom of the pitchfork band, made a higher low at your golden pocket, then you rejected the top of the pitchfork band, you had your flat correction in here, you pushed up, you flipped that band to support, you pushed up to the midline. The midline was your all-time high in 2024. You grinded down for 8 months to backtest the band again. You backtested the band. You had an attempt this time to get above it, but you formed a distribution range above it. You ended up distributing down. And remember, 74K lows was a major low because it was the wave 3 pitchfork. This wave 3 pitchfork, this kind of pitchfork in here, it was the lower band of the pitchfork. But you can see we tried a third time to break above that midline, and we got that really, you know, one tap. This was kind of a failed auction above it, and then your third tap. So 1, 2, 3, and after the third tap, you generally reject, and we could be seeing a move all the way down. You know, I'm really looking at the bottom of this pitchfork band. If we're going to see a bigger dump to the downside, the bottom of that pitchfork band, guys, coming in around, let's see, is that the right? Let's make sure that's on log scale because that is more than a 100% move. 69 to 71K. Yeah, because that is more than a 100% move, you have to turn that a golden pocket onto log scale if you're using a log scale chart. And look at what we could be doing. We could be seeing a move all the way down into that general area over the next few months here. David Brumbelow, welcome in, man. Thank you so much for being here. Any chance the Bulls bring it back? James, yes, we will see bounces along the way. It's not like we're going to go straight down. We are going to see some bounces. I mean, like, let me get back. I know I've been talking more macro time frame analysis, but let's get back to the local stuff here because we're looking at some trades possible. Guys, by the way, I told you that was probably not the low. That's probably not the low based off the volume we were seeing coming at the bottom. We are still seeing increasing volume come in on the charts. Now, yes, it looks green now because it ended with a green candle. Like, let's go to the hourly chart. Green candle, still red increases in volume coming in here. I do not think we're done. Watch the 98.4 or 96. Was it 98.4? 97.4 as a potential bounce area, because if we're looking at a 1, 2, 1, 2, 3, 4, 5, 4, 5, something like that, or we could be seeing a move down to 92K. But that 1.618, the way we get that is you go from the highs of wave 1 to the lows of wave 1 to your highs of wave 2. You want to use your primary 1, 2, not your secondary 1, 2. If you're using your primary 1, 2, when we do that trend-based Fibonacci, highs to lows to highs, and you look at that 1.618, that is where your wave 3 often ends, is at the 1.618. Now, it can go past it. It doesn't have to end there, but that's generally like your minimum and most common target for a wave 3 to end, is that 1.618. Also, guys, I mean, look at the increase. We have shorts in control now. Fresh shorts coming in. Those shorts are massively in control right now. We need to see long positions stepping in here, and look at towards the bottom. We saw some longs coming in on the SFP, and they were fresh longs coming in on the SFP. If we keep dumping here, those shorts are going to be trapped underwater, causing another squeeze to the downside. We're going to see now open interest here start to decrease, because all this last candle here, this last 15, 30 minutes of these last 2 candles, 30 minutes of time frame, has been long positions opening. Actually, last 4 candles. Look at, if we go here, let's do this. I will show you guys this. If we go into our vertical line and we look at this low here, where the SFP happened, you can see 1, 2, 3, 4, now 5 candles. And where did our CVD start going up? Right on the SFP of the low. You can see CVD is increasing here on the SFP of the low, right? So that means that we had fresh longs, and because our open interest is increasing still, we had a lot of longs coming in freshly on that SFP. Now, because we're dropping now, those longs are actually getting stopped out as we speak. Watch this open interest start to decrease right now, because positions are about to get stopped out. Those long positions are now going to be used as fuel to push the price down farther. And we're going to see this open interest here start to drop a little bit. And it could cause that squeeze to the downside to continue. More fuel to the downside. So let's see if that happens. Now, because every exchange didn't get the clean SFP, we could see a double SFP here. I mean, this is actually looking, let's now zoom in on the 5-minute chart. Do we have bull divs here? Not really. Money flow still looks kind of bad. We do have some bull divs on the 5-minute and money flow coming up on NAMI. We could see a double bottom here because some of the exchanges didn't get in on that first SFP. We could see a double bottom here, but I'm looking at this thing maybe continuing, or at least, you know, some sort of corrective range here before another kind of dump to the downside. Andrew, thank you so much for the kind comment, man. Appreciate you being here. Is there a chance we bounce now? Eddie, there is always a chance. It doesn't look the best. I have to say, it doesn't look the best here. Money flow aggressively leaving on the 5-minute. Let's go on to the 15-minute. 15-minute money flow is kind of bottoming out, but we don't have bull divs. No bull divs here. You want to see some bull divs on low time frames here. Yes, we see 5-minute bull divs, but guys, 5 minutes. Come on, it's a 5-minute div here. Now, let's go on to the hourly. Finally, by taking out last Tuesday's lows, and actually even the lows from this Tuesday, we do have some bull divs potential on the 1 hour, but your money flow is bearish here. And remember, one drive of bull divs is not going to overpower bearish money flow. On NAMI, we have now invalidated those bull divs, those same bull divs here. Money flow aggressively leaving the asset. Let's go on to the 4-hour time frame. 4-hour time frame. From last Tuesday's low, we could be seeing some bull divs on the chart. It's not confirmed yet. This momentum wave has not rolled over yet. Money flow is coming up here nicely, seeing bull divs on the money flow. So coming down to 96.5, if we continue down to 96.5 and continue to see these 4-hour bull divs, this would be a nice, at least long position, you know, maybe to bring up to backtest 1017 or, you know, the pitchfork band. We'll see how that plays out here over the next couple of days. Guys, remember, I am going to be live tomorrow as well, so we can follow some of this price action tomorrow. 8-hour chart. 8-hour chart is setting up for some nice bull divs, but they are not confirmed yet. You can see from last Tuesday's lows to the low we made today, we have potential bull divs on the chart, but look at your money flow. Look how bearish your money flow is. Bearish money flow is always going to overpower one drive of bull div, and this is not even a confirmed drive yet. Here on NAMI, we've actually even invalidated the bull divs from last Tuesday. You can see they're equal lows now, equal lows here. Now, yes, we did print a hidden bull div earlier. What was that? Yesterday, but that obviously didn't play out. Money flows curving back into the red again on NAMI. So, and today, if we close the daily candle as red as it is now, as big as red as it is now, if we go out onto the daily time frame, money flow is aggressively leaving on the daily time frame. We printed a hidden bear div on the highs on Monday when we rejected on the bearish backtest. Hidden bear div means continuation pattern. So it does everything to me looks like we could continue lower with bounces along the way, guys. Yes, we're going to see bounces, but we could continue lower until we see an actual major support level being hit and kind of, get a real relief rally from that. I'm just going by the technicals. The technicals do not look good right now for a macro bounce. Yes, we can get small, through $2,000, $3,000, $4,000 bounces to the upside, a few percent here or there, but it does not look like a macro trend reversal is due yet. Okay. I would long this RR is amazing to 111K. Yeah, 111K, but if you're longing now, I mean, for me, there's not enough confirmation to long right now. Could it play out? Absolutely. But to me, it looks like the highest probability is this is impulse 1, 2, 1, 2. We're in a third wave here. So if you long here, to get up to 111K, you'd even be taking out the highs of 107 until we can reclaim 107K. That's major resistance, guys. 107K is, remember here, let's go zoom out to the daily time frame. Not only was it the back test of our anchored VWAP and our channel that we broke down from, our big parallel channel that we broke down from, the bearish back test of this big parallel channel. And I know it's hard to see here with the picture work on, but if we look at the macro volume, not macro volume profile, but of this upper range here, you can see this upper range. Now that Bitcoin's kind of come back into that 98K area, we can look at all of this as a range. And if we turn on that range, look at where the value area low was of that range. And what did we do? We bearishly backtested that value area low and we rejected. So it's confirming not only a loss of the anchored VWAP, not only a loss of the channel, but it's confirming a breakdown of this distribution range and now confirming that we could see distribution to the downside by the bearish backtest and rejection of that area. So, and look at this, look at where money flow topped out at that high right there. Money flow's topping out there. Since then, money flow's been draining out of the asset on the daily time frame. The range is forming on the daily time frame, making higher and higher highs, bearish divergences on the daily time frame as money flow drains out. So this is the range we should really be watching now. Now that we've had a couple weeks of price action kind of back within this lower corrective area here, we can combine these two ranges into one range, and the value area low was right at that anchored VWAP. So that was your key backtest. This Monday, this rejection Monday, if you guys go watch my video on Monday and my stream on Tuesday, I harped all week about how important that bearish backtest was and how bad it was to reject harshly from that area. So for me, I don't think we're going to get up to 111K yet. Yes, it is the point of control of that range, but we still need to even get back above 107K, which is now acting as, kind of our macro resistance area, because we're below it. We've already confirmed the bearish backtest of that area. Okay. I sound optimistic that we'll have a big alt season. Yeah, Rui, I've been saying, especially if you've been in Jason's Discord, because I was in there the last couple of years, I've been saying this entire bull market that I do not think we're going to see an alt season like 2021 or 2017. I just didn't see it. And by the way, we did see an alt season on the coins that mattered. XRP, Solana, Chainlink, a few of the good coins, Ethereum made new all-time highs, but the ones, and Chainlink didn't make new all-time highs, but it got up to like $35. But all the good coins did have significant pumps in this bull market, and a lot of them, the real good ones, made all-time highs. Super Mario, thank you for all the TA. Can you make a separate educational videos about 3 and 5-way impulse moves? Yes, absolutely. Super Mario, that is Elliot Wave theory, and I do recommend Coons Trading. Coons is one of the best. I learned a lot of my Elliot Wave stuff from Coons. But I can tell you the market moves in two ways. It moves in impulsive moves, which generally tend to be 5-wave moves, and then it moves in corrective moves, which tend to be 3-wave moves. Now, after an impulse finishes, you always see some sort of correction. Now, this correction could be a sharp A, B, C down to your golden pocket, and that's generally a 535, or it can be a more complex WXY correction in there, and that we would have to go more in depth on that, but the market moves in impulses and corrective moves. And a good way to look at that is to look at your volume. If volume is increasing on a push up, it tends to be an impulse. And gosh, that's not a good example of it there, but you know, for the most part, it does tend to be that way. But yes, I can make some video on that. I can make some content on that. And thank you for being here, Super Mario. Yeah, alts are going to crap now. ETH, yes, okay. I will be on and off the live streams. Okay, yeah, no worries, Mark Dutch. Thank you just for being here, man. Let's see here. Yeah, I should make some more mods. Let's see. Samuel S is always here. So we'll do that. And then let's see. I wanted to make Mickey. Is Mickey still in here? Top is in. Alts are bleeding. Yeah, let's go into some of the alts here. Let's remove that. And let's put user in timeout. Go. Bro, I'm long on ETH from 2,900. Would you close the position now? Okay, let's go into ETH real quick. I will go into DOGE. I will go into KASPA. Ethereum, you're long from 2,900. Okay, let's see. That's pretty much where we're at right now. Now, actually 2,900. That's a really good low. Wow, that's wait, 2,900? Where? Oh, you must be long from way back in the day. That must be gosh, would you close it now? I mean, it's likely. So we're breaking our golden pocket and our value area low of our range right here that we wanted to see bounce. Remember, if you look at yesterday's video, I was wanting to see a bounce from this box here, this general box of support. But I also did say this was a local level that could get busted through really quickly. So we didn't hold that. We're breaking through our golden pocket. Let's see, have we hit? We're breaking through our 786 here. It looks like we might, yeah, come take the lows out. And guys, I did warn about this, man. We bearishly backtested our pitchfork band and we rejected. Let me just zoom out to the daily time frame here. I mean, this was very bad to see, guys. First of all, we rejected from, we hit our golden pocket at, remember, we were looking for a bigger 5-wave impulsive move to the upside. If you go watch my videos on ETH over the past month, I was bullish until we hit the golden pocket at 3,300. But we were looking at a 1, 2, 3, 4, 5 to end the bull market around 6K. But if you come down and you hit your golden pocket from the lows of wave 3 to the highs of wave 3, if you hit the golden pocket, it will invalidate the move. Well, that's where we did bounce from. But because we bounced from there, we can no longer look at this as impulsive. We have to look at it more as a 3-wave expanded flat correction. And now we could be about to impulse down here. So even if we bounce from this golden pocket, which by the way, it was a lot of other confluence was there. Golden pocket, it was the value area high of Bybit's range, Bybit's 4-year long range, and it was our pitchfork midline here. But I'm looking at now, we had our lower high. So let me go back to the other pitchfork. We rejected from the bearish backtest of our pitchfork band. And you can see here on the dump, the pitchfork band held as support. And then the top of it was holding as support those last few weeks when we were ranging in that range, the last few weeks. Once we lost the pitchfork band, now we bearishly backtested it. And guess what? We rejected. So yes, you can expect new lows to come in on the chart below the $3,200 lows that we saw, or the $3,000 lows that we saw. And so overall, I am expecting new lows to come in, and I'm expecting us maybe to come down to $2,700. The pitchfork midline, 2,700. It's right where the value area high of our last range was, 2,700. I do believe we have some support levels before then. We have a weekly level. No, it was a daily level at 2,800. Daily level at 2,800. We have a naked weekly point of control just below us. So I would be looking locally. I would be looking for a double bottom here. You can see we have a fresh naked weekly point of control at $3,049. We front run it on the dump that we saw a few Fridays ago, or a few whenever that was. We saw a front run of it. So now I would be looking actually to come down, SFP the lows from last Tuesday, excuse me, into that naked weekly point of control. If you see an SFP of 3,055 into about 3,050, sort of a double bottom here, you could look for an SFP of that low because you would be hitting a naked weekly point of control. But if you SFP that, I would be playing this as a scalp, maybe coming up, taking profit, because you could be forming a range here now on Ethereum. Rejection of the back test and then the golden pocket area. But yeah, Ethereum's dumping. We're losing locally. We're losing. Look at this bearish candle too. Bearish engulfing candle, huge wick to the upside. I mean, if it closes, look at your money flow on the daily time frame, really bearish. You did print that hidden bearish div on the bearish backtest of this pitchfork on Monday. You printed a hidden bear div, means you're likely to take out this low. Not today, maybe not tomorrow. It's likely to be taken out. But yeah, Ethereum, man, I was really hoping we would get a bounce from the golden pocket and that naked daily point of control at 92 or 32.66. But for me, and once again, guys, look at this. 1, 2, 1, 2, 1, 2. So you have your multiple 1, 2. Here's your big third wave. You could be seeing some bounces. You could be starting some 4 5s now. Or your third wave could really run all the way to take out those lows. You could see now some 4 5s come in here like that. You have your 1 2s. You have your big 3. Now you're going to have all your 4 5s. And we'll see what happens here, you know, with Ethereum. But Ethereum really does not have much support. If we lose this, if we don't bounce from about 3K, there's not much holding us in here. We do have this daily order block. Actually, that's been filled already. That order block there has been filled by that wick a couple days later. So we don't have much that would keep us coming down to 2,700. Unfortunately, we could see a big collapse on Ethereum. Yeah, and it's not looking good. Let's look at our volume here. Volume increasing drastically, still highest volume right now, meaning it's more likely to be a third wave here. You see how volume is increasing as we're dumping here. The dump is not likely not to be over yet. We probably have more of this dump to continue. And because we had a bunch of 1 2s in here, this is your big third wave. We're going to see some grindy 4 5s towards the end here. You might be able to get a bounce from $3,000 at the end of your third wave. Let's pull our trend-based Fibonacci extinction. Now, this is a little bit tough because that first 1 2, yeah, that's, oh man. Let's do this. Let's look at that. Yeah, your third wave, you're already even breaking the 1.618 there. Now, remember, the 1.618 is not where it has to end. It's just a common target for it to end. It can go to the 2.618, or even the 3.618. But I would be looking at Ethereum continuing to impulse down here. 1 hour, we do have some slight bull divs possible here. On the 4-hour chart, we have some nice bull divs looking, but here's, once again, money flow is draining out. Money flow is draining out here. Remember, a single drive of bull divs is not going to overpower bearish money flow. And let's pull that Fibonacci again from the lows here to the highs. If we start to close hourly candles below the 786, it's not going to look good. Let's see if we already have. Not yet. So, and remember, if we hit the 886 here, like if we pull that same Fibonacci from the lows to the highs, remember, this looked like a corrective move, guys. This move in here looked like a contracting diagonal corrective move here. And after that, if you hit this 886 at 31.24, let's just say 31.24, it makes it far more likely to take out this low. Even if you get a bounce from that 886, you're going to get a lower high and more likely to take out that low. So I would be looking at taking out the low. Honestly, I do think we're going to come now. The person that asked about, you have a $2,900 long on ETH and should I close it now? Well, we might get a bounce from $3,000 and then you might be able to get that small move back up and close it at like 32 or 33. So it depends on what you want to do there, but it does, the technicals do look like we might be coming down to 2,700. And I'm not saying today, tomorrow, next week. It might take us a couple weeks to get down there, but it does look like we might be able to see a move down there. Yes, everybody, Andrew, thank you for that. I'm going to make you a mod, Andrew. You're always here with me. Um, I do have a couple partners of the channel here. So the main partner of the channel is BYDFI. They are a VPN and KYC free exchange. All you need to do to sign up with them is an email and a password to sign up. Once you do sign up with them, you can get minimum of 20% discounts on trading fees, and you can actually earn up to 40% discounts on trading fees if you deposit some of the larger amounts into the exchange. They're offering up to $8,100 in futures trading bonuses, and they're offering some of the best initial deposit bonuses in the entire industry. If you deposit just $100, you can get a 50% deposit bonus, which is the highest I've seen out of any exchange. And then they're offering various 20 and 10% deposit bonuses depending on how much you deposit. Now, I've partnered with BYDFI to create a Telegram community, and I do post my analysis like earlier today as we were coming down to 1017. I said, guys, I don't see confirmations here. Doesn't look good. If you guys want to get access to that Telegram community, it is free. The only thing you need to do to get into that private community is sign up with BYDFI using my affiliate link and deposit $100 into the exchange. That $100 is your money to trade with. You will get the discounts on the trading fees, and you will get the bonus there. Once you've done that, click the Telegram link in the description of this video, and then type in /verify in your user ID, which will be right up here, and that'll get you access to that Telegram community. Once you're in, you're in. And I'm trying to create a community of great traders that all support each other, all help each other, all throw ideas at each other, and we can all prosper and profit together. So if you guys want to be part of that community, all you have to do is sign up and deposit $100. Also, next partner of the channel is NAMI Trading. That is this momentum and money flow indicator that I use for my confirmations. You saw earlier today, it kept me out of that trade at 100.7K because I said, guys, I don't see confirmation to enter a trade here. And so both the Market Cipher B and NAMI are crucial, but NAMI I'm partnered with for the channel. I got you guys a 50% discount on NAMI if you buy the lifetime subscription to NAMI. If you type in Divine50 in the discount box, you'll get 50% off. And if you're interested, both the website and the discount are in the description below. And then lastly, I have Bybit and AMXC, just a couple other exchanges that if you want to sign up with those exchanges and use my affiliate link, it's a good way to help out the channel. So thank you guys so much for listening to that. Thank you. If it's a good way to help out the channel if you do sign up there. I think it's a win-win for everybody. You know, all I do is I get a percentage of your guys' trading fees from BYDFI. That's all that I get from them. I don't get paid outside of that. I really do think it's a win-win because you guys get discounts, bonuses, all these cool things. And for me, I just get a percentage of the trading fees that you were going to give to the exchange anyways. So that's that. Let's get back to the TA here. Look, you know, we are dumping hard still. Let's look at, yeah, Bitcoin, guys. I'm telling you, it does look like it's going to continue pushing down here. So let's go to now. Okay. You're long on ETH. Yep. Okay, we did that. What is alt season going to 0? Yeah, alt season might go to 0, right? Alts are bleeding hard. If Solana goes back to $10, the crypto market is done. Yeah, if it goes back to $10, I'm looking for Solana to bounce at, oh gosh, we're below 144. We're at kind of a macro support level here. If we look at our range that goes back all the way to March of 2024, you can see that range that goes back. The POC of that range is around 144, which we had a naked weekly point of control there at 142. We're below it right now, or actually at 144, excuse me, at 144. So here's the thing, guys. If Solana, and I know this is going to sound weird, but in the past, Solana has actually been a leading indicator of what Bitcoin's going to do as well. If Solana is starting to break its point of control to the downside, maybe Bitcoin's going to break its 96.5 point of control to the downside. We're going to come a little bit lower here. Let's look at the total market cap. Total market cap is back at our key pitchfork support level. But last week during the live streams and earlier this week, I said we front ran the value area low. This is our 2025 range, guys. This is all the price action of 2025, kind of within this sideways range here. And you can see our value area low was front run on the dump that we saw last Tuesday. And I was thinking that we might kind of get one more dump down to the bottom of the pitchfork band and then kind of close the daily candle at or above that value area low. And then we could see a bit of a relief rally here. But that's a bullish scenario. A more bearish scenario is that we break this value area low to the downside, bounce from the golden pocket, reject on the bearish backtest of the value area low and the pitchfork band here, and continue down to the bottom of the pitchfork. And then if we lose the bottom of the pitchfork, it's no good. It's no bueno at all. So we'll have to see this. You know, we're going to have to see how this plays out over the next couple of days here. But total market cap is not quite, it's at a support level locally because it's hitting that pitchfork band again. You can see right now on the dump last Tuesday, we bounced perfectly from the pitchfork band, and now we're coming down to that pitchfork band again. But once again here, guys, we now have hit the 886. So if we pull a Fibonacci from the lows of last Tuesday to our highs on Monday, we turn on that 886. Look at where we're hitting into right now, that 886. What does that tell me? That even if we see a bounce from this pitchfork band here, I'm expecting a lower high before breaking this thing down, because in a larger downtrend, and we are making lower lows, lower highs, lower lows, lower highs, if you hit the 886 from the low of the move, you now have a higher probability to break that low, to continue the bearish market structure, in other words, and to continue making new lows. So now that we've hit this 886, even if we see a bounce here, I think it's going to be a small bounce before continuing lower. Okay, let me get a drink of water here, guys. All right. And I just got to check my take profit on the Bitcoin short. I want to make sure I have another take profit at 96.6. Yep. Okay. So a majority. Wow. Okay, cool. Yep. All right. Getting a little bit off reaction off of 98,000. Yes, let's see if we go down to 97.4. I really like Solana as well, guys. And Solana is one of the coins I own most of. I am hoping if we come down on Solana to 126 again, 125, 126, I'll be a buyer, because you can see it's our volume profile. It's the value. Actually, now that value area lows increased to 127. But you see that we have some key lows in there. The liquidity resting at 126. So if we SFP, and if we pull our Fibonacci from the lows of $96 up to the highs that we made at 252, turn on that golden pocket, but we have to put it on log scale. Actually, was that the 786? Let me see. That might be our 786 there. Yeah, around there. So I guess this box is not in the perfect confluence anymore. I think we have a weekly level down. Okay, we have a monthly level down there. We have the value area low. We have a pitchfork band. That's of our bearish pitchfork. And we have our log golden pocket. But that log golden pocket's now higher, because I was pulling it from this high earlier. So no longer a log golden pocket down there. But this general area, value area low 127 to about 120, is going to be pretty nice area of support. Liquidity grab, major liquidity grab as well. Man, it's, you know, the thing is we could be seeing a couple more lows come in too, because if we're looking more macroly, 1, 2, now we can't say this has to be another 1, 2, because there's overlap between the lows and the highs here. There's overlap. So that's a double 1, 2. All of this is your third wave here. This could be a 4, 5, and we need now one more 4, 5 to come in. So that would finish this double 1, 2 impulse, maybe finishing around 125, and then we could get a move up to back test the pitchfork. But once again, guys, remember I was just talking about on the total market cap and on Bitcoin, when you break a pitchfork down, it's no bueno. Well, we broke it down, kind of back tested it, and we're dropping here. Same thing with Bitcoin. If we break this pitchfork down and don't bounce from the bottom here, and we break it down, we could be seeing sub 70K targets. Okay, let's see. Majority still heavy in crypto. Yeah, okay, the 10-year spike today from 4.07 to 4.12. No wonder we dumped. Hard to tell where it's going next. Yeah, I mean, dude, the macro economy is so effed right now, and I just, You know, we see the bearish technicals as well, the monthly, the 2-month bear divs, the weekly bear divs, multiple drives. But let me get into some of these. I'm going to go to Dogecoin right now. Dogecoin is coming down. So it looks like we did reject from that naked weekly point of control on Monday. We rejected from the naked weekly point of control and the daily level. We actually talked about that last time we were on the stream. We marked that out. We talked about that being a potential rejection area. And you can see on that range, the candle body, daily candle body close. Well, let's pull it back to there. Daily candle body closed around the value area low, but we did wick up to that 18. And if you go watch, I think it was Tuesday's stream or last Thursday or Friday stream, we covered that. That area was the rejection area we're looking at. Now we're coming down to the pitchfork midline again. I do think we could see another bounce from that pitchfork midline. Let's zoom into the 2-hour chart here. And let's pull our Fibonacci from the lows to the highs. Yeah, it's going to be your 786 Fibonacci down there. Let's see if we have a naked daily point of control down there. Come on. Nope, no naked daily points of controls. Do we have any? No weeklies. Do we have any dailies? We're at our daily level right now. So if we mark out that daily support level, you can see we're attempting to lose our daily support level right now. I think that the 786 at the pitchfork midline is a better level than this daily that we're trying to bounce from right now. But we could see, because remember, on these macro pitchforks, guys, you generally will see an initial bounce from the pitchfork. And yes, we did wick past it, but you can see no daily candle body closes below the pitchfork midline. And then you'll get your lower high. You'll come in, you'll see another little bounce, making another lower high before breaking it down. So we could see a bounce from 15.8, a little bounce from 15.8, but I would look at it playing it as a scalp. But this does look like it might break down here. It might continue breaking to the downside. And unfortunately, I mean, like, look at how far we fell on that wick. I don't think every exchange did that. I know Coinbase didn't do it that far, but we might be seeing this bearish market structure continue. And we might start to break down even all the way down into like the 11 to 12 cent area. You know, probably not 12, probably like 11 and 11.8 to like 11.5. But for now, money flow bearish. We are starting to get some bull divs on NAMI, and your money flow is starting to bottom out here. But in order to get another drive of bull div, we would have to take out that low, and then you would have 3 drives of bull div on the daily with money flow bottoming out. And we would want market cipher B to be bottoming out on money flow and confirming another drive of bull div. So in order to do that, we would have to take out last Tuesday's low. I would look for a small bounce from the 15.8 area. That's that naked, pitchfork midline and 786. Pitchfork midline 786 right there. Let's see if we can't get a small bounce from this general area of support. This is a local area of support here. If we lose that, it's highly likely that we're going to come take out the lows at 15 cents. Yeah, man. Okay. All right, KASPA. Yes, we'll go through KASPA right now. Is this the chart that I've been using? No, I don't like that one. Okay, we'll go. Oh, that's Costa. Is that the best chart for KASPA for real? Looks like we were using the MEXC chart. So we'll stick here on the MEXC chart. But yeah, I mean, this thing doesn't look too good. It's been in a weekly downtrend here. We broke this pitchfork to the downside, obviously. We're coming down to the bottom of that corrective channel, but let me check out one more channel here. We'll check out our more aggressive downtrend here. Yeah, that looks like a little bit better of a channel. There we go. So we're at our midline. We could see a bounce from here. We can also pull our very aggressive bearish trend here. So let me zoom. First, we'll mark out some levels. We'll mark out that weekly resistance there. And we'll mark out our weekly support. I think, oh, we hit into it already. So we hit into it last week. We won't mark that one out, but we will mark out our weekly below us. Then let's go mark out our monthlies real quick. Yeah, that monthly's right down there as well. Okay, we hit that daily actually. So get rid of that. And then we can look at our aggressive downtrend from the, man, this looked like a distribution range right here. Distribution. But we're going to look at that very aggressive downtrend. We're losing the pitchfork midline here. And actually, let me just check. Is this, yeah, that's a modified. So there we go. Bounce from the lower band, came up to the top of the pitchfork, rejected, flipped your upper band to resistance, lost your midline, flipped your midline to resistance, and right now we're trying to hold the lower band. But you can see last Tuesday we came down to the bottom of the pitchfork. Now, unfortunately here, it does look like we're going to continue this local grind down on KASPA. Since the big dump happened a few Fridays ago, you can see we're in a nice descending channel here. Corrective descending channel. Oop. And yeah, we're coming up to, so right now we're at the midline of this descending channel and we're at the bottom of the pitchfork band. This could give us a little hold. Let's zoom in on the 4 hour here. Dang, golden pockets below us. Let's pull our volume of this right from when the crash ended of the volume of the descending channel. We're at the value area low. We're at the bottom of the pitchfork band. You could see a small bounce from this area. We are seeing some bull divs on the chart on the 4 hour. Locally, you can see lower lows through here, higher lows through here, higher lows through here. Money flow overall is kind of coming up here. Let's look at the 1 hour. Yeah, 1 hour money flow starting to bottom out and round up here. And you have the bull divs locally by taking out those lows just now. And you have bull divs here. Ooh, I mean, It's a tough one. You might be able to hold this and see a little bit of bounce from this general area. We did SFP the lows. You can see here, SFP the lows. And you could even look at this as a local range. This right there is a local range. So let's pull that volume profile. Yeah, you're at your value. Actually, you're below your value area low of that range. I want to look at some big daily ranges. No, there's nothing really in here. Okay, so what I would say here on KASPA is this monthly and this weekly down here, 34 to 33 cents. It's a nice little support level down here. I'm going to mark out our high time frame POCs real quick. Oh, wow. There's nothing until like 2 cents, so we're not going to. Yeah, unfortunately, we don't have data that will go back all the way to 2023 here. So the one thing I would say is I look at you have a naked daily point of control around the midline here at 46 cents or 0.46 cents. And it's this imbalance is in here. So let's mark out this naked daily. We'll turn off this indicator. And you see this big fair value gap. So you have a big imbalance candle. This big candle right here is an imbalance candle. And there's a lot of this imbalance that it's starting to be filled in now, but you could probably fill it all the way down to around the midline, right where that midline is. So you might come a little bit lower to fill in that fair value gap. If we turn on our fair value gap, you'll see that. See, that's still a fair value gap in there into your golden pocket. So just be aware, it looks like you're bouncing from the 50% of the fair value gap right now. That's where we're kind of bouncing from. But if you lose the level we're at right now, I'll say this on KASPA. We SFP'd this low. So if you long this, your stop, what you're going to do right now, you're long from the value area low of the range. Your stop is going to go below that low. And I would really just be targeting, man, I would be targeting that POC probably because you have some internal highs above it into that POC. But if you cannot hold, if you lose that, you're going to come down to this golden pocket because your fair value gap fills into this golden pocket. You do have a naked daily right before that, but you might see something like the wick past the naked daily into the golden pocket and close the hourly candle at or above that naked daily point of control. Overall, KASPA actually does look pretty decent compared to some of the coins. As far as the confirmed bull divs on the chart, you can see money flows bottoming out here and the momentum waves rounding off here on the hourly chart. Let's look at our 15-minute. Yeah, and you do have some bull divs, but I don't like the way the money flow looks here. You have bull divs. Actually, that's not a bull div because that's not a lower low. That's a double low, equal low. I don't know if you're looking at buying this on spot or if you're looking at kind of like low time frame trading, but you could attempt a long right now with your stop below the low. And then actually my TP1 would be the VWAP because if you reject that VWAP, you're going to continue down. But I would say KASPA, if we break this golden pocket here at 46 to 45 cents, I think it's highly likely that we're going to come down and hit the bottom of the pitchfork again. And you can see we actually just barely front ran the bottom of the pitchfork there. So I would say you're going to come down and actually hit the bottom of the pitchfork around 39 cents. Okay. That red warning candle is a scary one. Yes, it is. We hit 97.8 on Bybit. Okay. Yeah, we'll look at WLFI Super as well. Shorts printing. Yes, they sure are. S&P down, NASDAQ, Russell. Yeah, the traditional market's all in the red. I wouldn't jump the gun calling BTC bear market. Where did that go? Dang it. I hate when it does that. Even gold is down. Yeah, but that's the thing. We're seeing a big corrective move. So I'm not saying it's a bear market yet, but it's looking more and more like it could be the start of a bear market. Really, if we lose 92.5, that's when you get concerned. You lose 92.5, you're in big trouble. Repo is exploding. People are without jobs. It's so natural. Yeah, Mickey really understands what he's talking about with the macroeconomics here and the cycles. Mickey, I agree with you 100%, man. Everything doesn't look good. Jobs numbers are low. Inflation's still kind of sticky. Reverse repo market, all the 10-2 yield doesn't look too good. I mean, like we saw a lot of the warning signs of a potential like recession. I don't know if recession, stagflation, something like that. I don't know if it's going to be stagflation. I don't know if it's going to get that bad. And of course, the Fed is probably going to just turn the money printer back on if it gets bad enough. Emergency cut rates back down to 0 or, maybe 1. But it's not looking good. Okay, let's go into, we did KASPA. We'll go into Super real quick. And I'm going to cover these pretty quickly, guys, but we'll cover them pretty quickly. So, by the way, Jaffiel, remember on Tuesday, we were talking about a bounce from the 29.5 area. We were up in here still. We came down perfectly, got a nice little scalp trade from that area. Actually, remember we were talking about if you long this, you would take profit at the POC or at the value area high of the range, and then another at the highs of the range. So we did get a nice little bounce from that area, but now we're dumping and losing your golden pocket. We're losing your naked weekly point of control. We're losing your daily level. So you got a nice scalp trade off that. And I did say that's probably not going to be the low. I said we're probably going to come down to that 26 to 24 cent area, with the 24 cent area really being the top dog there. If we zoom out onto the daily time frame, it does look like we're going to continue down to hit that macro golden pocket. So it is between 26 and 23.7. And really the fair value gap, or I mean, not the daily order block, that order block on the daily at 24 cents that starts at 24 cents. I think that we are going to continue down there now. Look at your money flow bleeding out still. You did print a hidden bear div on the highs. So for me, I wouldn't be looking for longs until we get down there. Now, could you SFP? You're about to SFP the low from Tuesday. Could you get a small move from that? Sure, you might. I don't know if I would even look at taking that, to be honest. If you do take that, no, you don't even see bull divs there. You don't even see bull divs there. Let's go on to the 4 hour. Okay, you might have some nice 4 hour bull divs and money flow bull divs on Market Cipher B. And actually, NAMI has some nice overall bull divs as well. So if you get the confirmed SFP, what I would be doing is, if you're going to long a confirmed SFP of the low, of course, your stop is going to go right below that low. But if you come up here, you have your range in here. I would be looking at, if you SFP this and you come up to this value area low and you start to reject, I would close out like 50% of it and move my stop to break even, because you might just do that and then continue to roll down. But with your macro golden pocket so close below us, we're probably not going to SFP. We're probably going to drop to that 618. We're going to see a bounce from the 618, then maybe a move up to back test that before coming down to 23.5 or 23.7. But that's what I would be looking at still, man. Like, it does look like we are going to come down to that, 24 cent area. Okay, that was super. Let's see, what else were we going to look at? Chainlink. Guys, Chainlink is still at its macro support level, but we were looking at a micro support level. If you go watch yesterday's live stream, we were talking about, well, first of all, we broke this ascending channel down. We talked about that in yesterday's video. If you want to go watch yesterday's video, you'll see that that was a bad sign. And then we were looking at holding that golden pocket at the point of control at 14.8, but we busted obviously straight through it. And now we're coming down to your value area low and to the bottom of the pitchfork band again. And remember, I said that we might get that sideways range in here because it's our macro POC. It's a 2-year long range. If I zoom out onto the daily, you can see this range, this bigger range goes back to November of 2023. So it's literally a 2-year long range in here. Your fair value for Chainlink, 2-year long. And we're at the point of control of that range. And it's also at the bottom of a macro pitchfork. So I am expecting some sort of bounce from this general area, guys. But just like I said, the first time we bounced last Tuesday, I'm expecting a bit of a sideways range in here that could last a couple of weeks before an actual real move to the upside. And if we move, we might only move to take out these highs and then just drop right back down. If we lose like this pitchfork and this POC, if we start to close like the weekly candle below 14.3, gosh, guys, I think we are going to end up moving down to our $9.93 area, which is where your macro logarithmic golden pocket is. And remember, let me zoom out to the 2-day chart. This is going to be really important. On the dump that we saw from December all the way through April, multi-month dump to the downside, we front ran our macro logarithmic golden pocket. And that golden pocket is pulled from the bear market lows to this cycle's highs. And it's a logarithmic golden pocket. So if you pull your golden pocket from the bear market lows to the cycle highs, you can see your regular golden pocket was all the way up at 14.8, right? That's where we're at right now, actually. But we've already busted through it in this April dump. But because that is more than a 100% move to the upside, and we are on a logarithmic chart, you can see that's like a 500 or more % move to the upside. You have to click on this Fibonacci. You come into your settings and you put fibs based off log scale. And now you can see your golden pocket is where a proper 61.8% retracement, because that's what a golden pocket is, a retracement of 61.8% to 65%. And so if we look at that golden pocket now, you can see on April's dump, on the multi-month dump that we got here, we had front run that golden pocket, barely front run hitting that golden pocket. We also front run taking the liquidity of this low, even though it's an internal low. You can see we have some imbalanced candles right after it. So a lot of people were longing in this general area. They would put their stops below that low. And there is liquidity underneath that low. And both of those lows were barely front ran. You can see this low was barely front ran on the April low. Let me get rid of this. And then now April's lows are barely front running the golden pocket. So we have two major liquidity levels into a macro golden pocket at $9.93-ish. $9.92 to $9.35. And I do think that if we lose this pitchfork, yes, we probably will see a bounce from the value area low. But we're probably going to bounce from the value area low to back test that pitchfork. And if we reject, then that's when we come down to our golden pocket and we could see a good move. So I am looking, gosh, I really hope this pitchfork holds, because I just bought some Chainlink at $14. I bought some earlier this year at $11. It was like $11.60 or something like that. And we are at macro support, the bottom of the pitchfork, and our macro point of control of a 2-year long range. Now, let's zoom into the 4-hour chart. The thing is here, we might see a sort of double bottom here, or taking out the lows of last Tuesday to get the bull divs. It would give us nice bull divs on the chart. Let's go to our daily time frame. Yeah, money flow still looks bearish here, guys. Unfortunately, money flow still looks bearish. And we don't have the bull divs confirmed until we take out last Tuesday's low. The big thing is you don't want to start closing daily candles underneath the pitchfork. You can see here at the last couple times we hit the bottom of the pitchfork, we wicked past it quite a bit, but we didn't close the daily candle below it. This second time we hit the bottom of the pitchfork, we closed the daily candle right below it, but literally right away we reclaimed it with a bullish engulfing candle. So if we start to close a daily candle below this pitchfork, you want to see the very next day a bullish engulfing candle back inside the pitchfork. If you don't, you could be dropping down to 1140 and then to like the 990 3 area. I bet you we will see at least some sort of bounce from the value area low. Okay, let me scroll down to the bottom here. My money flow is bearish too. Yeah, money flow looks bearish everywhere, dude. SUI, yeah, we'll do SUI. 2019 inflation was 1.5%. We're under 2% target. Trade the market you have when you see spikes, short when we dump to key levels. Yeah, yep. So just trade the levels, right? No matter what the market's doing, mark out your levels and you can make money both short and long. But I do think I agree with Mickey. The economy's super effed, and we could be seeing a bear market come in, guys. Like we really could be. Any chance the Fed takes wait, Fed takes 6 to 9 months to actually play out? Like to start cutting rates or to start printing? I mean, they're not going to start printing. First of all, Jerome Powell said he's not going to start printing until until the interest rates are at zero. They're far from zero, and they're only cutting 0.25% every time. Now they could do some emergency rate cuts of much larger, a full percentage point or so, but I don't think he'll start printing until rates are at zero and probably held at zero for at least 3 months. Then he could do some emergency cuts. So it's going to be a while if they decide to print. I'm retired and my wife is not replaceable at her job, so it won't hurt me much, but I feel like okay, yeah, there will be a lot of people that get hurt. Uh Printing money is not a short call. Once you do it, you cannot reverse it for 2 to 3 years. There's no breaks, but you have to take inflation. Yes, and here's the thing: when you print more money, sure, it's going to cause some short-term spikes because some of that money is going to work its way into markets, but it just destroys the economy long term. Okay, so we'll go into Sui. C Train, welcome in, man. It's good to see you in here. Yeah, so we did link just now. We look at that. Am I missing any coins? Did you guys post anything that I forgot to look at? We'll go into Sui. Okay, Sui is coming down to the bottom of the pitchfork again. And remember, yesterday we were talking about micro levels of support, but I did say careful with these levels because they could get busted through if we get volatile. And of course, we busted through it because we got volatile. So that was the value area low. And I believe there was a naked daily point of control there as well. Or it was your golden pocket. Let's see. It was your 786. And yeah, it was your 786 value area low right there. But we lost the 786 in the value area low. Now we're coming down and we're SFPing the lows from last Tuesday. You can see we're attempting right now, so I'm going to delete that. And then I'm also going to delete this one now because that's changed. Our golden pocket's no longer there. But we're SFPing the lows into our pitchfork band. And look at another perfect touch of the pitchfork band, pretty much. Touch pitchfork band, touch the pitchfork band. But last week and earlier this week in the stream, what did I say? I said, guys, I want to see a drop down to the bottom of the pitchfork band, where at the bottom of the pitchfork band at 171.5, we have our key swing lows down there into the bottom of the pitchfork band. So we might get, remember, with these bands, just like here, one bounce, a little bit of a wick, but a bounce, and then you break it down. We might see a bounce here, another lower high, then break down to the bottom and a bounce, and then we want to see some sort of recovery here. But I'm looking for the SFP of 171.5 into the bottom of the pitchfork band around 170 or 1.70 to 1.69. And that would give us some nice bull divs on the daily time frame. Hopefully, money flows curving to the upside here. So that liquidity, remember the two things that run the market the most, volume and liquidity. Liquidity 1, volume 2. So taking out that liquidity at 171.58 into the bottom of your pitchfork band around 170 to 169, depending on how fast we get down there, is going to be key for me. And that could be a nice swing long position. I'm actually going to set, we already have our alert set there. Yep, we already have our alert set there. So And remember, we were bouncing from the top of the pitchfork band. We kind of lost it. Then we were holding the midline. We lost that. Now we're attempting to hold the lower band. If we lose that, we're going to go to the bottom of the lower band. And then if we lose that, we're going to come down to the bottom of the pitchfork. You know, anywhere from like 138 to 137-ish or so. But locally, it does look, man, this looks really bad too. You know, you have a bunch of 1-2s in here. You have your multiple 1-2. Remember that descending channel 1-2, 1-2, 1-2. Your descending channel 1-2, and then you have your big 3. Now you're going to be looking for a bunch of 4-5s to come in. No, let's do this one from this. Yeah, you had your kind of descending channel in here. You're starting to break it down now. And then you want to start to see a descending channel as you're ending your 4-5s in there. But you do have some bull divs here. If you know, this SFP, you might get a small bounce up from this SFP. So what you would do is if this is the end of the 3, if all these guys in here are 1-2s, this is your 3, you're going to get a small bounce before getting some 4-5s to come in. I would be, if you're going to SFP this scalp, if you took the long right now on this SFP, my first take profit, first of all, your stop is going to go below that low, which is very tight. And then my first take profit would be between, if you're pulling your from the highs of wave 3 to the lows of wave 3. Let's pull that out a little bit and put that. You're going to be looking between the 382 and the 0.5 Fibonacci. So I would be taking some profit at least up there. And that's still a nice 6-to-1 risk reward ratio. Or even if you just go to the 382, that's still a 4.5 risk to reward ratio on that trade. And remember, it's all about risk management. You want this to be 3 or higher, and you're calculating your position size based off this stop loss percentage number. So, because you could do this now. All your 1-2s, you could do this, and then you could start all your 4-5s in here until you get down and take out that low. Okay, that is what I would say. So if you don't SFP this low, which right now it looks like we're trying to, if you lose your pitchfork band, the top of the pitchfork band, I think you're going to see a pretty quick move down to the 171 area. We don't have much in here for support. Look at this is just a wick in here. There's nothing really in there. Let's see if we have any levels. Do we have any naked monthly points of control? No. Do we have any naked weekly points of control? No. Do we have any naked dailies? No. Do we have any monthly levels? No. Weekly levels? No. Daily levels? No. So there's nothing in here. There's nothing in here. If we lose this, the top of this pitchfork band, we're going to come down and take out 171. We're going to come down to about 170. The way money flow looks hyper bearish here, it does look like we're going to. But the question is, do we see a small bounce here to the 382 first before coming down? That's possible. Now, what you could be looking at, since we're in a bearish trend, it is dangerous to short this far down after this far of a dump down. It's dangerous to short. But if you're looking for scalp shorts because the trend is your friend until the end and the trend is a downtrend, then what you could be looking at actually is if we do come up to that 382 or 0.5 Fibonacci and you start to reject, you could look for a short after rejecting. So say we come up here, 3-wave corrective move, we reject from that 0.5. I would probably short a little bit, like after you close a couple candles, short in here. Your stop is going to go above that high, and I would be targeting 170, and that's still a really good risk to avoid scalp short position. So 193.5 or so, you could, enter maybe at 193 and then look to come down to 170. Okay, Bitcoin is really attempting to hold this here. But guys, this isn't a very clean SFP here. 2 4-hour wicks now. We might see a little bit of a bounce, but I'd just be watching for a rejection of 10. First off, the value area low of the range we're breaking down, 100K pretty much, that psychological level. And if you get above that 101.7 is going to be the back test of that pitchfork band. Okay. Uh, 15-minute too much bull div, not to short-term bounce. I mean, 15-minute, let's see here. No, look at that money flow, man. And I don't see any bull divs. Look at, we're getting this is not a bull div here. You want higher highs in the price, you want lower lows in the price action, and you want higher lows in the momentum waves. We don't have that. This momentum wave here, I guess, yeah, that is a very slight bull div. Very slight, one drive of slight bull div, but your money flow is always going to, if you have super bearish money flow like this, it's always going to overpower one drive of slight bull divs. So absolutely some bull div, but it's not, I would not say it's multiple drives of bull div here. Even on NAMI, locally, you do have this lower lows here and higher lows here, money flow starting to come up. So yeah, you could see a small bounce here, but that is not, like, this money flow here would be keeping me out of that trade. And it's not, to me, that's not really a bull div there. Yes, technically, you can see if I put my cursor, my dotted line on the low of this momentum wave here, it is lower than this momentum wave here, but just barely. So you have one drive of slight bull divs. Always, as long as I've been on my channel, I've been telling you guys that bearish money flow will always overpower one drive of bull divs. And it's not every time, but a majority of the time it does overpower. So for me, it's not enough. Oh, you're using RSI. Okay. Let's check that out real quick. That's interesting, Crypto Clown World. And I know you know how to trade, Crypto Clown World. So I'm not saying you're wrong at all. Please don't mistake that with me. But yeah, I don't even really see bull divs on the RSI right now because we're going lower here. But we'll see. I mean, it is a key liquidity level. We're starting to form a little range down here at this key liquidity level. Okay, I don't like those wicks on BTC. Yeah, I don't like the wicks either on BTC. Where the fuck is Chuck Norris when you need him? Yeah, amen to that, Mark Dutch. Chuck Norris would just punch this and it would go back up. He could punch it up for us. Guys, please hit the like button if you got any sort of insight into the stream today from this live stream, any sort of insight into the market from this live stream. Please hit the like button. Also, remember, we do have the Telegram community. It's free. All you have to do is sign up with BYDFI using my affiliate link. Mark just posted it in the description. And if you do sign up and deposit $100 into the exchange, then you can click the Telegram link in the description of this video. Once you've clicked that Telegram link, type in /verify in your user ID, which will be right up here. And that'll get you access to the Telegram community where I do post trade setups, my thoughts on the markets. You can also go into the general chat tab and tag me and ask me questions on coins. So if you're interested in joining that community, it's free. Also, BYDFI has a competition running right now. I forgot to talk about this. The competition running right now for my celebration of hitting 3,000 subscribers on YouTube. So they're running it from November 5th through December 5th. There's 21 days left. What they're doing is they put $2,000 into a prize pool. And for every $1 million that's traded, they add $100 to the prize pool. But the top 5 traders are going to get 80% of the prize pool, and the remaining 20% of the prize pool is going to be randomly distributed amongst other players. Doesn't matter what place you're in or whatever. And then also they're randomly giving away of Samsung earbuds. So if you're interested in joining this, it's a way you could earn some extra money even with your trading, even though you're doing your normal trading. So I thought this was really cool, BYDFI. I appreciate them doing this for us. But if you guys want to sign up, I'll put the link in the description of this video. Let's see here. There we go. Link is in the description of the video to sign up for the trading competition. But thank you guys so much today. It has been a crazy stream. I don't think we're done dumping yet, but we're attempting to see an SFP here. Money flow does not look good to me. Let's look at the 5-minute. Maybe the 5-minute is seeing some. Yeah. Now here is where we're starting to see some nice little bull divs that could give us a little bit of a bounce. Lower lows here, higher lows here. Money flow is coming up. And look at NAMI. Money flow's been coming up, crossing into the green, and we have those bull divs here. So yeah, could we see a move up here? We could see a little bit of a move up, but I would be watching the back test of the value area low, which is coming in right where that VWAP is going to be coming in. See, this VWAP is going to continue dropping here. And you can see the value area low is going to be in alignment with that VWAP. Oftentimes on bearish days, once you get very far away from the VWAP, you'll see a little bit of a relief rally to put like a push up to the VWAP. If you reject from that VWAP, you can expect the bearish momentum to continue. So that 100K level, 100.4, let's say 100.3, 100.4, you might be able to get a relief rally from this bull div up to that area. I'm not convinced yet. I'm not longing yet. I did take more profit out on my short trade from 107.2. Let me see if I can post that. Here we go. I'll post that in the Telegram, but I'm pretty much now, I think, 35, 45. I'm 90% out of this trade already. 85% out of this trade already. So, anyways, I'm looking to take some more profit, potentially close the trade at 96.5 and look for a long down here, 96.6, 96.5. And then if we do, but I do think that because of our 1-2s that we're seeing here, remember at the beginning of the stream, we talked about this, a 1-2, 1-2, we could be in our third wave. Then we could see some 4-5s, 4-5s, and we potentially might come down to between 94 and 92.5K. 92.5K is a big support level, being our macro value area low in confluence with the golden pocket. You can see our golden pocket pulled from the 74K lows up to our all-time high. And if we turn on that range, our macro 2025 range, value area low is right there as well. Now, depending on how you pull this range, I mean, if you pull it to the top of the impulse there, or if you pull it even to kind of the start of the range, it's there either way. So that's what I'm looking at, that 92. It's really closer to 92.6, but you can see that value area low is right on top of that 0.65 golden pocket. Do I think we're going to get a bounce from the POC? Yes, I do. I think we'll get some sort of bounce from this POC. I mean, it's inevitable, guys. We've been dropping harshly. We're probably going to get a bounce from there, maybe come up to back test the band before coming back down. But I think we might be coming down over the next week to 92.5. If we come down to 92.5 with continued bull divs on the daily time frame, you bet my butt I'll be long in that. I'll be long in that, and I'll be looking to take it up to, you know, around 114 actually. Let's see, the value area high of our macro range is 116. And I do like this value area low at 107 pretty much. But I would be looking at pulling a fib from the highs to those lows. Let's just put it right on that 0.65 in value area low. I'd be looking to come up around 114,500, because if we do that, say we continue to grind down, we get a nice 3-wave corrective move, reject from the top of the band, bear market could start maybe. Maybe we're going to flush down and take out the lows at 74. Anyways, that's kind of what I'm looking at here. That would take months to play out, so we'll have time to look at that on the streams. But thank you guys so much for being here. I will be live tomorrow as well. I might stream a little bit early tomorrow. So let's see. I might stream at 1 p.m. Eastern Standard Time instead of 2 p.m. Eastern Standard Time. But I'll post it in the Telegram or just put on your notifications if you guys want to see when I'm going live. Put on your notifications on YouTube, and it should let you guys know. Thank you all so much for being here. Appreciate it. And let's just keep trying to trade these markets, keep trying to make money. Okay, wait, let me see. Samuel, you just posted a super chat real quick. ETH monthly bear div is nasty. Let's look at that real quick here. Let's check out Ethereum. Yeah, and you know what? With us taking out that all-time high at the top of a macro pitchfork, like that's what is concerning to me, man. But let's hide some of this stuff. Let's get rid of that. Let's turn off our naked weeklies. Okay, monthly. Wow. Wow, wow, wow. Yeah, that is bad, man. Check that out. That's actually just barely, but it's a higher high. We SFP the all-time high, so it's a higher high here, lower high here, and money flow is draining out of the asset as that forms. And look at, like, just even here, bear divs as well. Pretty crazy here. Actually, not that. Not that here. But and then money flow doesn't look too bad on NAMI, but if it starts to roll over with this monthly close, the big thing here with Ethereum again, guys, is check out on the weekly time frame. Let me zoom out to the 2-day time frame. That's the daily, but this will work. On the daily time frame, our key anchored VWAP from our $1,400 lows. This is comparable to our 74K Bitcoin anchored VWAP, right? So that was our major low from the April crash, from our December through April crash. And the anchored VWAP from that low on Ethereum, we did come down and test it once. And when we tested it and held it, we got a nice impulse up from there. But now we're starting to lose it. And look at, we're closing. We didn't really close any daily candles below it. I mean, I guess we closed a couple below it here, but for the most part, it was some wickage past it, and then we got to move up. But now that we've bearishly backtested what was acting as support, now is resistance. And if we close today's daily candle below that anchored VWAP, and really if we close the weekly candle, so let's zoom out to the weekly. Let me get rid of all those brushes. And if we close the weekly candle below that anchored VWAP, we could be seeing a move similar to what Bitcoin did. Because look at last week, we did not close the weekly candle below that anchored VWAP. Last time we hit it, we did not close a weekly candle below that anchored VWAP. So if we close the weekly candle below that anchored VWAP, we could see a move down to $2,700 to $2,500. And last time we did, look at with Bitcoin. Let me show you that with Bitcoin. Bitcoin did not test its 74K. Let me clean this up a bit. Bitcoin did not test its 74K anchored VWAP on the weekly, but the second we closed the weekly candle below it, this weekly candle below it, look at the next weekly candle, back tested it bearishly, and then we got new lows. So, and it's, you know, a significant percentage below it now. And Ethereum, you know, we're 9% below that anchored VWAP. So if Ethereum closes this weekly candle below that anchored VWAP, we might be able to get a, you know, that's an 18% move, but it generally does move more than Bitcoin does too. So yeah, we'll see what happens here. It's not looking good if Ethereum closes this weekly below. It's about $3,300. So thank you guys. Have a good one. I will see you tomorrow. Please hit the like button if you haven't done that. Thank you all for being here. Thank you all for being such cool, just